Hello and welcome everyone to Gold Asset of the Day for the 16th of March 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So this week, all eyes are now going to be on the FOMC statement on Wednesday. And of course, with that, this is where you get huge volatility in the gold market. This is where you really want to capitalize. Now, last week, of course, we saw gold prices break out towards all-time highs within $5 of 2,075 US dollars per ounce. We have palladium breaking out to all-time highs, copper breaking out to all-time highs, platinum and silver breaking out to 9-month highs. But inevitably, as we talked you through last week, make sure that you're being nimble in these markets, that you're regularly banking profits, that you're banking profit on strength and you're taking advantage of these parabolic moves that we see to the upside, because inevitably you are going to get profit taking. We saw profit taking at the end of last week in the lead up to the European Central Bank announcement. We've seen profit taking again in the lead up to the FOMC statement. And of course, oil prices too. We banked last week at 118 US dollars per barrel for over 2,500 points of profit. Subsequently, we've seen oil prices drop all the way back down towards 93 US dollars per barrel. In fact, this has actually given us an opportunity to reload yet again here, $35 cheaper than the price that we had last week when oil prices, they broke out to 129 US dollars per barrel. So what you want to do is capitalize on these slingshot moves higher, the parabolic moves that we're seeing within the commodity super cycle. Markets, they don't go up in a straight line, they will zigzag. And with that, what you want to make sure you're doing is regularly banking profits. And then with that additional profit you've locked in your portfolio, you then have more capital to deploy on the corrections, on the pullbacks, especially when you are timing the cycles alongside major events. And one of those is this week's FOMC statement on Wednesday. That is going to create lots of volatility within the precious metals and commodities, especially, of course, the gold market. So gold last week broke out to 2,070 US dollars per ounce. We talked you through that correction that we were expecting in the lead up to the European Central Bank announcement. Subsequently, gold prices have dropped all the way back down towards the 1900s here, giving you a much better opportunity to build back in at much lower prices. Hope you did not FOMO and get right in at the top of the move last week. We told you last week, again, you want to be banking into strength. Make sure that you're regularly taking profit off the table, where we banked over energies and platinum. In the previous week, we banked 4,000 points of profit at the start of last week. So of course, for that calculation, every 1 lot contract that you'll be trading, that's $40,000 of profit. For every 10 lot contract that you'll be trading, that's $400,000 of profit. And that's really been the name of the game here, to keep locking in profits as commodities have gone exponential, they've gone parabolic during the commodity super cycle, but nothing goes up in a straight line. You want to make sure that you are regularly banking profits. Now, with respect to hedge funds and money managers, in the last week, we have seen overall net longs increase again on gold. Of those hedge funds that have a position on gold right now, 82% are currently long. But again, you are going to see profit taking, especially in the lead up to major news items like the FOMC statement and quad witching at the end of the week as well, where you're going to see outflows with contract expiry too. So all of that we have been anticipating. This has really gifted us an opportunity to again build back at much lower prices. And this again comes down to utilizing statistics, data, market intelligence, understanding the daily, the weekly, the monthly, the quarterly cycles for each commodity, the key areas of liquidity, the intermarket correlations, the ratios in the market, the capital flows, which are extremely important. And alongside that, understanding how the hedge funds, money managers, banks and institutions are positioned in the market in real time. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.